Hello, hello everybody. If you do fall in line to my stream, I'm going to show you guys something that I've just came across on dividend investing and how to make high risk into low risk. So I'm going to go over a few things with you from my chart right here. So I've noticed something. So as of right now, I have $5,713.56 uh, in the account, and plus $5,424 in margin. All right, so how I'm going to break this down is that every week I get a payment from WiMAX. Every single week I get a payment from WiMAX. I get a payment from XDTE. Um, I get a payment, I think SCHG is quarterly and NASDAQ is also quarterly. All right, so we're going to go down here and we're going to look at these other things I have decided to use with my WiMAX fund. So according to my profile, so right now I almost doubled my profile with the margin. And if the rate is going the same with the investing, my portfolio should grow about $6,000 a year. All right, so $6,000 a year. I should be able to, margin should be dwindled down a lot. And I want to show you some cool features that are in uh, Robinhood that really will help build this portfolio. So it's called reoccurring investments, not drip. Forget about drip, disable drip. Uh, it's actually kind of pointless. And it's I've been reading a lot of guides and stuff on and following some other channels, and people doing it a lot longer than I have had said that if you can invest daily, you get more of um, more of a bounce back than you do than waiting and holding and stuff like that. So this is basically be investing in every single day, but it's all dependent upon my WiMAX dividend payment. So if my dividend payment is $221 a week, which I believe is, so I'm also buying 57 more shares. So I will have, let me open up my calculator. Hold on one second. 662 shares times 0.21. That's $139 a week. So I should be getting, so this is 2, so 2, 4, 6, 8, 12, 16, 18, 20. So $20 a day, that's $100 a week. So I'm investing $100 every single week, which is completely covered by my dividend if it is at 21 cents. Let's see how low we can actually go. So if it was at, let's say 12 cents, if it goes to 12 cents, I won't be able to purchase all the dividends. So 662 times 0.15. So it has to be 16 cents in order for me to buy all the dividends and have a little bit of margin paid down as we continue to grow. So as you can see, some of these I've added Realty Income. I've added the Russell DTE. I added, I think I already have SHG. So these are growth, NASDAQ, SCHG. UDIV is also a growth. VU is also a growth. Now, Realty Income it should be a growth. I think it's going to make a massive comeback next year in 2025. It's going to make a massive comeback. So I decided to putting more into Realty Income. I don't know why my headphones keep on turning off. So I decided to put some more into Realty Income. So going over all of this, I should get a payment of at least of at least, so let's just do it, 100 times 240 market days times 240. Okay, let's go do it. 100 times 240 market. All right, no, we're not doing $100 a day. We're doing $100 a week. So 100 times 52. That's $5,200 that my portfolio should have more money invested each year. Okay, so after 1 year, we have invested another $5,200 from the dividend from YMAX. Now but everything is going up. So everything is going up. So we're maintaining this reoccurring buy if the dividend is higher than 16 cents. And then we're going to see where our margin available balance is. All right. And then once we should have at least an extra $6,000 to $8,000 to also invest again. So we'll add another $6,000 to $8,000. So we're doubling our portfolio in 1 year. All right. So we're going for that income, and then we're going to diversify that risk, de-escalate that risk to safer stock holdings. Now, I don't think YMAX is going to be gone for the next 5 years. So I think it's going to be able to hold, if not go up in the next 4 years. So now let's go over this. So right now, I'm going to say YMAX is giving me a 60% dividend. So we're going to go to a dividend calculator. Market Beat's the one I like to use. All right, so starting principal, we said $11,000. $11,000 is my starting principal. Roughly initial annual dividend, we're going to say 60%. We're not going to think of any increase. We're not even going to calculate the increase. This is best case scenario. All right, this is going to be the best case scenario, not the worst case scenario, but best case. So if the price stays relatively the same, that would be technically the best case scenario. But we're not going to add any more money because everything's going to be reinvested through the reoccurring buys. So every week. So I really can't calculate that. So, but we're going to select drip, yes. All right. Tax exempt, we're just going to keep it at 15%. All right. So we're going to select 4. And this is the minimum amount that we're going to make. We should make. But at the best case scenario. So we hit calculate. At the end of a 4-year period, we will have a $34,000 income. But remember, what did I say do? I said we're going to see what our margin balance is by the end of the year. If we have a lot of extra money, we take that margin and drop it into yield max. If it's still being pretty good, if it's still holding. If not, don't touch it. But I think it will hold, and I think we will have an extra $5,200 minimum in margin extra to invest at the end of the year. So, and whenever we want to stop, we can stop at any time and just do it or we can just keep on doing it until we get all our money back. But we're essentially doubling our portfolio already in the beginning. And then throughout the year, we added more. We added $5,200 more. The portfolio should go up in value based off the growth stock. So then we can borrow more money based off that growth, which should be stable. If the dividends payments are not, they have to be at least 16 cents to be able to purchase all. So everything above 16 cents is actually going to be margin repayment. So that also as well. So we're guaranteed, if everything holds, $5,200 extra dollars in margin at the end of the year, minimum. So so that's my breakdown. Here's the stocks again. We have the Nasdaq. We also have UDIV. We have VU, XDTE, which is another weekly pair. Remember, we're only doing $2 on these for as of right now. If I see a massive increase in dividend payment and it's holding at that price, I will increase it by 50 cents per share in 6 months. So we're gonna maintain it for 6 months. We'll see what we're at in 6 months, and then we'll increase the reoccurring buy to 50 cents, 50 more cents. So 250, 250, 250, 250, 450, 250, 250, 250. Our goal is to get it up to about $5 a day per stock that we have. And we're going to do this for 5 years. Remember, we're going for a retirement goal of 5 years. So the perfect case scenario would be this right here. And at the end of 5 years, we'll have almost $52,000 of dividend income by the end of the portfolio's development. So this should be a 5-year portfolio for $51,000. If it holds, this is the perfect case scenario. Remember, annual dividend has to be 16 cents or more to be able to hit this. I think that's roughly. I think that's what it would be at if 60% for the dividend would be roughly around 16 cents. I think the last one was 15 cents and it was like 50 something percent. So if the price stays the same in around the 18, 19 ballpark, I think we'll be okay. I think we'll be really close to this annual dividend of 51,000, but this is the minimum. Remember, we're also adding more margin, a minimum of almost $6,000 a year extra in margin every year. So we're gonna add. Let's just say we're gonna add the margin up front. Let's see how much we would have. So year 2 we'll be at $17,000. Plus, so it'll be 15,000 plus. Let's go over this. So 15,000. So we'll be at 16,000 at the end of the first year, roughly 16,000 at the end of the first year. Then we add 6,000. So let's switch this back to 1. So now we're going to be at 23,000 year 2. Year 2 will be at 23,000. So calculate. We'll be at $20,000 in annual dividend income after year 2. We'll be at $23,000. So we'll do the next one. So we're gonna add. We should be able to add about $12,000. So 6,000. We should add about 10,000. So that will take us up to $33,000. And then we add. So we'll be at $33,000 at the end of the year. So $33,000, we should be able to add 15. Let's just say 12,000. So 12,033 plus 12. Clear. Let's see. 33. I can't do math. Plus 12. It's $45,000. $45,000 at the end of year 3. We should have that at the end of year 3. We'll be at $40,000 at the end of year 3. And let's say we should be able to grab, so it's just scaling. So see how much it just scales. And even that, at 45,000 year 3, just off of a $5,000 portfolio, because you're borrowing 5,000, you're already doubled your portfolio for the year, and then you're going to add another 5,000, so that's 15 to $16,000 in year one. And then in year two, you're doing the same thing. It's getting you 60% more, and you keep on growing and you keep on going. But it has to maintain for 5 years. So I hope you guys like it. Here's the portfolio again. I'll try to give you updates every single month. NASDAQ, SCHG, XDXC, YMAX is our rock investor. So everything is based off of YMAX, but it de-risks itself over time. So we're looking at around $50,000 in dividend income in 5 years, just with this small portfolio of $5,700, and the margin being $5,424. The other settings, you have to go into your account and you go to settings. You go down to investing. Make sure you have on account type is margin. You turn off dividend investment. Turn on your day trade protection. Just because you should. Now taxes, I'm not personally worried about taxes. Some people are if they're still working. I'm not working myself, so I'm not really worried about those taxes. So there's just so many things you can do. You can go ahead and have your margin all paid off in 1 year, because it's quite possible with holding on to YMAX. And then we just look at all the other features that we have here. So investing, here we go. The reoccurring, I'm down $61 at the moment, but I do have a $271 deposit coming in, not deposit, but dividend payment coming in, which will be available tomorrow. And then the purchasing of the account will happen tomorrow as well. So tomorrow would be day one of the investment period. Then I also have another buy, 56 shares. I'm hoping I get it at 18.16. The current price is 18.15, so which is good. So we might get it at 18.16. Maintenance requirement is only 25%. Other platforms like E-Trade, you can borrow more on E-Trade than you can on Robinhood, but my settings won't work the way I'm doing it on E-Trade, because they do have a maintenance requirement that's a lot higher. So that's how we're going to look at it. Total account value is $11,113.92. Hopefully I won't have to dip into that anymore, and I can just I don't even have to touch my portfolio anymore. I can just come in and see what happens. Because remember, we're doing small investing, but it's investing it daily. So another key factor is remember that YMAX is a weekly dividend. Other stuff on my portfolio are also weekly dividends that will also add to the investment pie. So right now my account is based off of YMAX. It's not based off of XDTE, any of these other ones, but these will slowly but surely get more, and I'll get more dividends from them as well. So for instance, XDTE, I'm gonna have at least $20 on XDTE by the end of this week. So I'll be getting a dividend this week, and then the dividend the following week. I'll get that too. This will be monthly. So, but these are not being reinvested. It's just going right to my cash flow. Everything's going right to my cash flow. I buy in this because it's dividend growth, weekly dividend, monthly dividends, and stuff like that. So, and growth. So that's how I decided to work. I was watching a video and I says, "Oh wow, this is pretty cool. How this is working out this way." So it's really simple. Easy portfolio. It's very high risk, and the only way to make a high risk to low risk is diversifying your portfolio, so you don't ever get a margin call. So that's what I'm hoping, that these will be able to be built up. So right now, this is at 0.7%, 0.07%, which isn't that good, but it will be good over time. So we have 0.7, 0.7, 0.7, 1, 2, 3, 4, 5, 6. So we have to get that up. I probably will increase everything except WiMAX, because I want to divest WiMAX. So maybe I should. No, not now. I'm going to increase everything else except WiMAX to $2.50 at the 6-month range, depending on how much WiMAX pays in dividends. All right, well, thank you all for watching. Please follow my channel. I also try to do AI videos that are like maybe 12 to 13 seconds. Watch those. They're just for fun, just for shits and giggles. So thank you all for watching, and hopefully this will work.